Good afternoon and welcome to today's webinar and virtual panel discussing navigating through the unprecedented headwinds in European trade finance. My name is Toby Miyaka and I'm a Managing Director of Greenwich Associates, leading provider of global information based on products and services into the financial services industry. We are here to provide our clients with unique market information, insights, and advice to help them ultimately gain a significant competitive advantage. Founded in 1972, we are now part of CRISIL, an S&P global company being integrated with Coalition at this point. I'm very happy to introduce today's speakers. I'm delighted to start with Christine Rovelli. Christine is currently the Vice President and Group Treasurer of Finnair, the flag carrier of Finland. She, since becoming Finnair's treasurer, she has played a key role in the company's capital structure and strategy efforts. And before joining Finnair about 8 years ago, he was working in investment banking in London and New York, advising on M&A and capital markets transactions. We also have on the panel today Jean-François Denis. He is Global Head of Trade Solutions and Network Management at BNP Paribas and was before that Deputy Chief Transformation Officer at BNP Paribas Fortis. So I'm interested also on the transformation side because we, I think, all somewhat in transformation right now. He also held a post as a Deputy Head of Cash Management at BNP Paribas and the Global Head of Electronic Payments Operations at Fortis, and actually started his career at Siemens, working in engineering positions for about 8 years in the banking and telecoms business. And last but not least, I'm very pleased to also introduce you to Bertrand de Comminges. Bertrand is a renowned industry expert currently responsible for HSBC's guarantees, trade, and receivable finance business development activities in Europe. He joined HSBC about 7 years ago, coming from JP Morgan, where he was managing the EMEA structured trade advisory business, and before that was a head of trade EMEA at RBS. He also has extensive experience working with Johnson & Johnson, and as a financial consultant in the restructuring and of well-known blue-chip companies. So definitely a very distinguished panel today, and we're very delighted to have them here. Before we go into more detail, I would like to reflect a few points that we've gathered by interviewing large corporates with at least 500 million euro in turnover across Europe. We have been in the field discussing with group treasurers and specialists on the trade finance side since April and will continue doing that till June. So far, when asking about the impact of COVID-19 on large corporates, not surprisingly, but still stunning, and if you look at the numbers, 3/4 of clients said, or corporates said, that the impact was at least negative, if not highly negative. Only a quarter said it was with no impact, or very few saying it was positive. On the right-hand side, it shows also a little bit the nuances here. As always, Europe is not a homogeneous marketplace. I would say, though, that it's not just about where we ask the questions, but also when. So as the pandemic has evolved and measures have been taken over time, obviously some of the questions have been different, also different somewhat by industry, of course. Now, when I discuss market impacts with my clients, I always like to discuss the selection criteria corporates voice when thinking about a trade finance provider. And I think in this year's discussion, it's particularly interesting that competitiveness of pricing, one of the areas that is usually number one in terms of selection criterion, still important, but significantly declined as being mentioned to 49%. And I think the reason for that is definitely that clients are right now more in the struggle to get things right rather than heckling around the price, and really want the support they need in these unprecedented times. At the same time, international network seems to improve further in terms of importance. And this is a lot to do with the fact that clients want partners who really have boots on the ground, who know what they're talking about. Things are changing rapidly. You have to have the ear close to the ground, and that's what's appreciated. Another point here, which is quite interesting, is that the quality of e-banking and digital platform really has improved in terms of getting up as an important selection criterion, not making it into the top 3, but definitely now with 38% coming from a very modest 11% in the previous year, very much on the up. Now, looking at some of the pain points when dealing with trade finance, manual efforts and paperwork required around contract creation remains the number 1, but is somewhat declining. Also to do with a lot with some of the electronic capabilities that are increasingly being put in place. And what I find interesting here, if you look at the right-hand side, looking at some of the verbatim, I think a pivot here is the e-signature discussion. So many corporates having told us that obviously now with people working remotely, those banks who are able to accept and facilitate e-signatures really have quite an advantage over others. And having that in place is, I think, just a pivot on the broader expansion of the electronic banking capabilities that are not only on the cash management side, where we've seen them for quite some time, but also now getting a lot of momentum on the trade finance side. Thinking about how banks can support corporates, I think there were 2 themes coming out very vividly. On the left-hand side, supporting them with corporates with operational capabilities and liquidity, especially payment holidays and extensions obviously were very much mentioned, as well as extension or continuing provision of credit. So the liquidity part, especially at the beginning of the crisis, which in some parts we are still in, I would argue, was very paramount. But then also the advisory side, not as significant as operational and liquidity discussions, but probably also to do with where we are in the crisis. Our expectation is that the advisory part will get more and more attention once people have their heads more above water again and are thinking about the medium to long-term impact this may or may not have on their business more broadly, and therefore advisory being very important. And in particular on the supply chain strategy side, we can see here that a stunning 39% of corporates told us that COVID-19, as well as other geopolitical risks like the China-US trade challenges, as well as the commodity crisis we are facing, really have effect on their supply chain strategy. And it's interesting to see also that there are in particular areas around Nordic, Spain, and Italy that are particularly pronounced here. And as we also have a lot of banks joining today and looking at trade finance, I also want to share a few data points from our friends at Coalition. I think the first point to say here is a brief reminder that trade in terms of global revenue pools, that Europe or EMEA is a very important part of this whole global pools with about 50%. And although if we compare first quarter 19 to 20, the decline is not there yet. I think the Asia figures are already kind of a preview of what we should be expecting going forward in the second quarter. So already Asia obviously being impacted by the COVID a little bit earlier. And so we would expect anything between 10 and 20% of decline in the second quarter also for Europe. I would like to now really, after this brief introduction and reflecting on some aggregate feedback that we've received from corporates across Europe, I would like to start the panel discussion, introducing kind of a framework here where we see the evolution of the current crisis, where we see that I think initially we have this shock experience, people then trying to react to the immediate position, and then the assessment of one's ecosystem to respond as a second point. So basically getting your head above water, orientating yourself, what's going on and how are others affected in my ecosystem that I'm dependent on to function. And then I'm not sure how many are already on the path of recovery, but definitely at some point we will have to enter that path of recovery again, luckily. And then obviously the question around rebuild will be very prevalent. And with all that, we'll have the digital impact coming along, as we've seen that the current crisis has certainly accelerated some of the digital discussions that we have already had prior to the crisis. So let me now maybe ask the first question, and maybe ask that to Christine. Maybe if you can share with us your experience in the initial shock phase, Christine.
Sure. Well, as many of you probably know, Finnair has a very large route network into Asia and China in particular. So we were one of the first to notice the impacts of COVID-19 as we saw the travel demand start dropping. And of course, then China imposed travel restrictions. So back in January, we were announcing changes to the network. And in March, we ramped down the network to the bare minimum. Basically, at this point, I think we're flying about 5% of our budgeted capacity for the month of May. And we will end up pretty low for all of the quarter. Now, we've introduced a lot of measures on board and at the airport for the safety of the customers and crew to get people more comfortable with flying. And then, of course, from a personal standpoint, as a treasurer, managing costs, which are always a focus for an airline, became critical for us as revenues declined. And so we've also announced plans to permanently reduce our cost base by about 8 million by 2022, and announced a couple of other capital raising measures to keep our liquidity where it needs to be. But that also has made us pay more attention to our supply chain, to our trade finance and our suppliers, to see where we can get extra help assistance there.
Right. I think what's interesting is also what we've heard is that compared to the financial crisis 2008-9, banks were much more accommodating at least in the initial phase. So what worked well also in terms of the bank-firm relationship, and what did not work well in the first kind of few weeks.
So, well, what worked well, you're correct to say that the banks had a different perspective this time around, although it really depended on who you were dealing with, because what we have to remember with an economic expansion of this length is that there are a lot of people in the industry generally who have not seen or who were not in the industry in 2007, 2008. And they didn't really know how bad it could get. And then there were people who have been around and who immediately twigged that things were going to get serious. And so we can kind of break down the reactions along those lines. We had very productive conversations with some of our major suppliers because, of course, they have seen the industry cycles. But there were some newer, let's say, fintechs who, just failed to immediately grasp the enormity of what we were facing, I would say. And then, what went well again from a personal standpoint, we'd been using many of our treasury and payment systems remotely, so we knew they would work because we'd had a remote work effort for quite a while. What we had to do was protect the key personnel who can't work from home, the people who maintain the airplanes, operations, cargo, and things like that. So that was a learning process, I would say.
Maybe Bertrand, I mean, if you want to, jump in, maybe also in the initial shock phase, how HSBC was dealing with it, and then turning to the clients, what kept you most busy in the first phase?
Yeah, absolutely. Well, we began the initial phase slightly earlier, I presume, due to our strong presence in Asia, China, Hong Kong, Singapore, and other countries that happen to have a deeper experience dealing with similar situations. So from December, early in the year already, we were in touch on a weekly basis with our colleagues over there, with our clients, and we were providing advisory, as you just mentioned, becoming critical in this time. What we did as a bank, and every bank has the same, is basically to launch our contingency plans. Client service centers were operating close to 100% from home. Most of the people were working from home. The first travel controls in Europe, for example, came in early February. Well, before many other entities, all business travel was stopped, but for approvals coming from the top of the house. Of course, that basically means no travel at the end of the day, but if it's strictly required, and we put some people, for example, working from home mandatory basis when someone had any contact or had been in any place well before anything happened. So, and also, and overall, it did work well, to be honest. Those contingency plans have demonstrated robust, and we keep operating those. Our client service teams, 100% working from home and delivering 100% on their SLAs, due as well to the reduction of volumes. But it's overall, we have demonstrated that the plans work at the end of the day.
Right. Jean-François, maybe the BNP perspective. I mean, obviously you're a powerhouse in Europe, but you also have links globally. Obviously, also Asia experience, probably pivoting some of that, similar to what Bertrand said earlier. So, if you want to share with us your thoughts.
Yeah, thanks, Tobias. I think what is specific to this crisis, I would add maybe next to the very strong mobilization at the end and kind of flexibility with, I think, all our large organizations have, or many at least, have proven. I find it incredible, honestly, because okay, teleworking, home working was in place in some area, a bit less in some others, and all this change all in a sudden at the end worked quite well, I think, I would say as an industry overall. Now, what is specific, I think, is the volatility of the situation. And that's, well, what we saw, of course, is basically the crisis moving around in the world, with China, Europe, then India also was a big point, and so on, and then the Americas and so on. So, in fact, what is very specific is to keep pace with the right information at the right moment. And that's very specific in this situation because it was moving, and it's still moving from 1 week to another, up to the latest detail. And that was, I think, the most cumbersome one, to keep that track on that, and indeed having global presence and having people on the ground getting this type of information, sharing with client, obviously this type of information and so on is critical. The second topic I can mention, and certainly I would say our priority was to say, and for I think many banks or all banks, was to say, okay, being wide open for business. And I mean there not only for basically supporting crisis situation, obviously, sometimes, and especially sometimes in difficult sectors and so on, but also to just run the BAU, if I may say, because it was not the moment, and it's still not the moment to add on top of the crisis any other issue. So I think that was really the key point. And final point, I would say, even in that shock phase, I would say, and that the first weeks and now months, was basically that banks have put an enormous number of very specific processes. So I'm sure we'll discuss that going forward, but of course, moratorium on loan reimbursements, state guarantee type of programs and all this. And this has to happen next to all the BAU I was referring to in a couple of days or weeks sometimes, right? So I think that was really how we experienced this massive work and massive mobilization and flexibility all around. And final word, sorry. All in all, of course, we have been hit by a lot of logistical problems, and of course, again, from one sector to another, even more. But all in all, the ecosystem of trade finance, I find, has managed it, right? We had some big questions at some point, I think, even whether force majeure would be invoked by one or the other. It did not happen. So all in all, it's with delays and with impacts, it works, which is not too bad.
Thanks. I think you just mentioned one point which brings us actually to the second question. And when we had a discussion prior to this webinar, Christine, you mentioned that indeed the information is very fluid. So what you based your decision on in April or in March was different from what you know now. I think a lot of expectation at the time, at the beginning of the crisis, especially in Europe, was that it might be a short-lived blip, but now this seems to develop into something a little longer, or at least we don't really know, to say the least. And so, first question would be, are you already in the response phase, or are you actually still in the shock phase? And even if you are still in the shock phase, obviously you are thinking, I'm sure, about how to respond, because it is you're part of a big ecosystem. It's a global company, very much linked with many elements across the world. So, which actions did you take to respond if you're already in that response phase in the first place?
Sure. Well, we are in the response phase. We didn't have a whole lot of time to experience shock because in the aviation industry, if anybody online is the pilot, the first rule in the cockpit when there's an emergency is that you fly the airplane. So no matter what else happened to the business, to the environment, to the competitors, to the customers, anything, we had to keep the company going. We had to make the basic decisions to get the cash in the door and to get the cash out the door and to keep everything running. And so that formed the basis for the recovery or the response strategy. Let's say we're not recovering yet, unfortunately. And so after we pared down the minimum network, then we had to look at, okay, well, what can we do with this in terms of our operating costs, in terms of our supply chain, in terms of our financing, working capital, things like that. Those will all be affected by our much reduced network. So given our shareholders, our largest shareholders, the government of Finland, we of course applied for a government guaranteed loan from our pension fund to provide us with immediate liquidity. We went into the market with some aircraft assets to do sale leasebacks to raise additional liquidity, and of course we've announced that we're going to be doing a rights issue to shore up the solvency aspect of it. But then in parallel, those are big tickets. In parallel, there's all the small tickets. So if we're not flying to an airport as much anymore, do we need that defense guarantee to free up a little guarantee capacity there? If we're not putting as many tickets through, a certain channel, do we need to keep that channel open? Things like that you start picking up. Those are volume things. There are a few million here or there, but they're all very important. And then of course you're talking to your counterparts all the time. I'm talking to our creditors on a daily basis, informing them what's going on, keeping them comfortable with where we are, our liquidity, the situation, the trends that we're seeing. Because I think from my experience being on the other side of the table, one of the worst things you can do in a time like this as a company is put your head under the table and just keep running the company. You've got to be talking to people who are extending credit, who are in the markets that you're in, and who are in a position to work with you.
Yeah, thanks for that. I think you just reiterated, it's really the realization, even more so than before, that you're part of an ecosystem. So both from you can't just think of yourself. You have to keep also those alive that are part of making you able to operate. And I think that's a really important point. So it's although we have been talking mainly to large corporates, we see there's a long chain attached to those large corporates, and there's, you know, as much as the banks probably have some responsibility towards their corporate clients, the corporates themselves seem to take some responsibility also for the other partners in that line, which I think is what we've seen worked quite well. So good to hear, by the way, that you are not in the shock phase anymore, but you are in the second phase.
Yeah, I would just add to that briefly. That is a change again that we saw from 2008, where at least when I was looking in the industry at that time, companies took a very hard line with creditors. And you know, one could say if that strategy was successful in the long run or not, but this time it is a much different approach, almost uniformly. It's much more collaborative and much more focused on finding a workable solution for all parties.
Right. Thanks. So Jean-François, maybe on the BMP side, so you know, I'm sure a lot of your clients are now in the respond phase. How do you, what are the priorities that you're trying to help them with?
Maybe the first thing is I was alluding to the lot of interdependencies in this crisis with the other parts of the chain, and your supplier, of course, your clients, and so on, and the fact that it all evolves at different speed. So you may be in a country in relatively back to some kind of good shape, while basically your counterpart is still in a lockdown situation and that type of things, right? So nobody has crystal ball, that makes our economists say, okay, there will be a rebound, mechanical rebound at the end of a lockdown in a country, because just there were no demand and there's again a bit of demand. But because of this interdependency, this will last for long, relatively long. Nobody knows how long probably, but last for long because of all this interdependency. Hence, I would come back on two things. One is the need for constant sharing, client and banks, the concern, the issues, and the understanding of the, let's say, local situations, so as to be able to kind of co-design, if I may say, the forecast and how to build the recover phase, or at least here the response phase in first. So this, because of all these interdependency. Second, coming back to taking care of, for instance, your supplier, to help them to help you in a way. Of course, there are instruments for that. We know, being on payment terms, being on financing them, and so on and so forth. And probably these are things to look at, especially in this phase in some sector, because even if we take some sector where are doing well, like general stores, you know, where with food and general store type of retailer, which were kind of doing well, right? I mean, it's still a concern maybe on the supply chain on that side. So these are the type of things that with the instruments that are available, by the way, so there's nothing to invent in this, but to take all these toolbox, I would say, to try help build this response phase. Yeah, that's primarily I would say the thing I think we should do basically together.
Yeah, I think you just mentioned one thing that we even saw in our research prior to the crisis, that in particular in trade finance, it's not about the invention of new products. So it's not about product development, but it's really about the execution of existing capabilities, and making that smoother, making, you know, the pain points that, you know, we briefly touched upon less strong. And I think that this current crisis, and I think also, you know, we should think of this is not just COVID. You know, we have multiple crises going on at the same time. I mean, in trade finance, if you think of the commodity crisis on the oil side, if you think of the China-US trade war, you know, there are a lot of things that are impacting now and will impact earlier, but will stay with us, I would guess, unfortunately. But it's really about the operational capability and excellence of doing these things in the right way, and not thinking necessarily of some fancy new the product as such. So Bertrand, maybe any thought? I mean, I saw you also taking notes, so I'm sure you have some additional thoughts to this.
Yeah, no, I was thinking in some of our clients at the very same time, and it was mentioned by my fellow panelists, the diversity per sector, industry sector. There are winners and losers, and even in every industry we have seen winners and losers. And but we have identified to 9 different shifts on supply chains happening at the moment. But let me start more on a temporary standpoint. At the very beginning, we found companies taking advantage of the crisis to get market share. So we were supporting them relocating manufacturing lines from China into Vietnam, from China into India, from Western European countries into Eastern European countries. To do that, we provided them with guaranteed letters of credit, supply chain finance line. We onboarding in significant number supply chain finance programs and other elements. Also, to others that were increasing their sales, we increased the payment terms they were allowing their customers. So they were providing additional working capital to their customers whilst they were discounting those sales through the bank. So instead of paying them on 60 days, now they were paying them on 120 days. Therefore, they were facilitating the purchase of their goods in order to make market share. Besides corporates, a second element, very interesting, and thanks to the use of artificial intelligence and other solutions, it was fraud. There were too many opportunities in the environment, too many people trying to get advantage of this situation. And we identified supporting governments, actually quite a few of those, as well as corporates, trying to buy medical devices and medical goods bring them into Europe, into the United States, or back into Asia. And that was quite significant a couple of months ago. And our systems identified that, and that's where the systems we were referring before as well during the different questions. So those were at the very beginning. Since then is really the use of all trade solutions. As risk increases, the importance of traditional trade products increase, as a matter of fact. So open account become much riskier to operate, and the rates of traditional trade products increases. And that's an obvious statement at the end of the day, but we need to use those solutions in order to protect our clients, and our clients need to use those solutions in order to protect themselves. And we have seen as well that raise in those solutions. Liquidity through supply chain receivables finance, risk management through guarantees and letters of credit. And overall, it has worked well. It has protected some sectors and has allowed them to grow. Other sectors, of course, have been greatly impacted, and volumes have dropped drastically and dramatically, as we heard before. And it's more about providing them revolving liquidity working capital lines that sustain those business models and they are ready once the market reopens, because it will reopen. And we are seeing that already in Asia. And we have seen countries in Asia and in Europe now that are fully reopened, and this will come back, that's for sure. So we need to support our clients as well to be ready to restart the engine running. Indeed.
Right. Thanks. Right. Maybe just, I mean, we said, Christine, that you are in the response phase, so not yet in the recovery phase, and in your case, and I think the airline industry is indeed one of the sectors that is particularly hit hard. I think with no doubt. But I'm sure, I mean, as you're very strategic, you are thinking of initiatives that you will then have ready once you are getting into this path of recovery. And also, I was wondering, we had this discussion earlier where clients did say that they are really rethinking their supply chain, and as a result of this, and whether that is something that you are really now also looking at, because just on the medical supply side, as an example, obviously a lot of people realize that if you're dependent on only 1 or 2 countries producing 80 or 90% of medicine, maybe not the best idea. At the same time, I think I would not lean towards pessimists and say, oh, now we have to bring every industry back home. to 100%, because the efficiencies that we've gained via global trade, really provided all the progress that I think we all enjoy, especially in the developed world. And so, any thoughts on the initiatives that you're planning to take, and what would be your also priorities? Because I think getting the right priorities lined up is also really important, because there are 1,000 things you want to do, but making the choices in the right order is also key.
Sure. Well, aviation is a global business. So even if we wanted to restrict ourselves geographically, it wouldn't really work. And then when we look at our supply chain, there are only 2 major aircraft manufacturers. You can pick between the 2, but then there isn't really the scope, at least with the really big ticket stuff in the industry, to make many big changes to the supply chain. Of course, from a treasury's perspective, there are tons of counterparties you can deal with. There are lots of different products that you can use. There are lots of different sources of finance to optimize if you want to do that. And certainly we look at doing that all the time, not just in times like this when your toolbox is a bit more limited. Our strategy, our overall operating strategy, still remains that we provide the shortest connections between Asia and Europe, focusing on sustainable, profitable growth in those markets. Of course, now we have a bit of a recovery time before we can pick up again with that strategy. But as I said, again, on the treasury side, rather than diversifying suppliers, I think we're finding, at least right now in the response phase, that having a few really good relationships is better than having a lot of quite superficial or solely price-driven ones. So clearly we need to reduce expenses, and we're certainly looking to do that. But rather than just search for the cheapest supply of X, whether that's money or whether that's working capital or whether that's treasury management system, whatever, we're also looking at ways that we can create value with those partners, for cost-effective solutions for both of us that are going to be more lasting than, okay, I'm going to take this contract for the next 2 years, and boy, in 2 years it's going to hurt, kind of thing. Because I think, for us, that's not really the long-term relationship that we're looking for with most of our counterparties.
Thank you. Yes, I think this just reflects also, what the slide we had on pricing. So obviously everybody wants to be efficient and not pay too much, but people also appreciate that long-term relationships, are worth a lot, and being there when you need them, regardless of pricing, is especially in these crises, is really the paramount part of it. So I think that, what we've also seen, and speaking to a lot of other treasurers, is that corporates do say, we know that some things cost a certain amount of money. So when we also access some bank services, we are willing to pay as long as the transparency of what we're paying for is clear, and that long-term relationship. So I think that is just something that is a good refresher, because I think after the financial crisis, people got back a little bit into the mode of whatever is the cheapest might be the best, and having these reminders of the relationship quality is really a good one. So maybe Bertrand,
one thing there.
Sure.
I think we look at it not necessarily as we'll pay more for a relationship, but we look at the value of risk transfer. So what kind of risk are we taking with the absolute cheapest supplier? And is it worth paying a little bit more to get somebody who's a little bit more experienced, or a little bit broader in terms of the products that they can offer and things like that? It's not necessarily cheap is bad. It's like, why is it cheap? What is the risk that we are taking that we wouldn't necessarily be taking with someone else?
Yeah, I mean, that comes back to what Jean-François said before, in terms of keeping all the partners current with how the information that they need to make the right choices and the right decisions, because at the end of the day, risk is anticipating the unknown, and so the more partnership you have also in exchanging those information that you have throughout the value chain will help to make better decisions. And then if we can make better decisions, it should be ultimately also cheaper decisions, right? So I think that's, and the transparency around that is key. Maybe Bertrand, I mean, in the path of recovery, especially as you, as an organization with your very strong Asia business, I'm sure you have a little bit experience already on path of recovery. We see China probably being on the path of recovery already, although we never know, whether we have a second wave or a third wave coming. But any thoughts on that? And maybe also adjacent to that, I think of the ecosystem also in terms of not just corporates and banks, but also the regulator. So what would you think about kind of changes to facilitate the path of recovery within the broader ecosystem with all parties around? Sorry,
you're on mute.
I can't hear you right now.
I was on mute. Indeed, sorry for that. You asked Christine about the supply chain of Finnair and how this could be accommodated into the path of recovery. We are seeing 4 major trends on our clients that are being discussed or being implemented on that area. And those slightly touch on the regulator. And let's not forget, there are as many regulators as countries, probably multiplied by 5 factors into that. So it is not that such an easy answer anyway. But the major trends we see in corporates of any size, global corporates, mid-sized corporates, or smaller companies at the end of the day, because through the internet, some of these smaller companies are truly global entities at the end of the day. The first one is the reshoring or the near-shoring of their supply chains. Now, more and more, the discussions are about Eastern Hemisphere and the Western Hemisphere, and have to have a resilient supply chain that accommodates crisis, health crisis or political crisis, currency crisis, or any other type of crisis that sustains my business model and makes me competitive. The second one that has been involved for the past couple of years, increasing, thankfully, is sustainability. This is becoming an even more important discussion today, not only because funds pressure as fund managers sitting in boards of companies, but because the consumer and the final customer as well is demanding this, and sometimes is ready to pay more as well. And this has been shown in several analyses. So sustainability will be a second element that our clients are even accelerating due to the crisis, how they can reshape their supply chain becoming sustainable or becoming greener. The third element, and you mentioned at the beginning on services, is the growth of non-physical trade. Thanks to new technologies, for example, 3D printing and others, some companies and some sectors are targeting more services, trade services, not so much the physical good or product trade. Therefore, the manufacturing happens locally whilst the expertise is brought globally. And that's a completely changing pattern as well that we are appreciating. Of course, not every sector can apply that, but we are seeing that being analyzed and discussed in multiple sectors and very diverse business models as well. And the last one is a shift from B2B into B2C, business to customer. Many companies are trying to use the internet in order to sell their products straight into the customer, not anymore through the traditional channels, and some of them actually are being very efficient. And those patterns will have a direct impact as well on the supply chains, because as you get out of the middleman, actually you can create a much efficient distribution and supply chain for your own business. And we have seen that in particular sectors like the fashion industry, where fast fashion producers have a definite competitive advantage against the traditional fast fashion company. Some are struggling, some are thrilling and widening this crisis very, very dynamically and very well in some occasions. So these are 4 elements. There are a few others, but these are critical. On top of all this, you mentioned the regulator. A pattern we have identified is actually government intervention. Governments are taking a much active role these days. The issuance of debt will actually weight some leverage into governments, and their behavior may vary and may change as well, because we are getting into a highly leveraged environment in which, of course, those guaranteeing the debt or those issuing the debt may have a say on the competitiveness or on the market rules. And this is a pattern that we are exploring very cautiously, seeing how things react. Did I answer your question? Maybe I know.
Yes, absolutely. I think, particularly, I think the last point is very true. With obviously the leverage and those who are committing to that, they will have a bigger say. So maybe Jean-François, I mean, if we combine that point on the recovery phase also with the fourth point in regards to the digital impact, any thoughts on the more long-term view on navigating towards the path of the recovery, and also with your background, I think you're a good place to kind of kick off also the digital discussion. What does it mean? I mean, we've seen a lot of change already in cash management. Trade finance is much more document heavy and involves many more parties within the chain, let's say. So you're much more interdependent, and so it's a different discussion. But as you can see with the data we've shown in the beginning, there is clearly a move, and a much more pronounced move than in the past on the digital side.
Yeah, but maybe to make the link with the path to recovery to digital, I would say, and not to repeat anything that has been said for sake of time, probably there are two reasons to go to digital. One is obviously to try work better on a daily basis, like we experienced those last time, where it's difficult when you're not digital. It's so stupid as that, I would say, but indeed cash management is much more evolved on that front. And I'm sure for Christine, the systems are usually, if not full digital, your exchange with the bank is digital, I'm sure. This is not true in trade. So there's a big gap to do there, or big steps to do. The other reason to go for digital is that, and that's a link with the previous discussion, I think, is that all this discussion on possible diversification, maybe establishing some kind of relocalization sometimes and things like that, this and the current economic environment will put a lot of pressure on costs. Put a lot of pressure on cost, and that's maybe a good way, obviously, to basically kind of try compensate a bit at least, right? So these are two reasons. So going to, let's say, to the digital front, I would say that I think there are two categories of things we can do very practically. The first one, we don't need to align all stakeholders in the chain. It is in the corporate to bank or bank to corporate space, okay? The first thing is, of course, we have e-banking tools, some proprietary one. We have relatively, compared to cash management, I think in the industry, a lower level of adoption on those tools. That's one thing. But also in the multi-bank area, and we see more and more, and I'm sure we have corporate clients listening in the webinar that are equipped already, or that are being equipped, that we're doing project to basically for the trade finance products, going digital and master on their own processes, internal process across their own organization. The next step is the corporate to bank, and we have a tool, we have SwiftNet. I mean, it's not very much used when you compare to cash management. It's not applicable to all, to everyone, of course, but clearly these are steps where we can make improvements there. It is, by the way, multi-bank and so on, and there are other options. And of course, we need also, still on that corporate to bank space, bank to corporate space, we need also to a little bit leverage on what we've put in place in the crisis, to be honest, I think, in terms of e-signature and so on, for those clients, those corporates that are not equipped with SwiftNet or that are not equipped with our own proprietary e-banking tools and so on. The second part is much more complex. Indeed, this is, and especially looking at the documentary piece of work, where we have this problem of all these documents and this set of documents that we need to exchange. And on 21st century, having to wait for merchandise to be delivered at a port because there is a piece of document missing, it's hard to understand. We'll all agree on that. But this still happens, right? Now, the point there, I think, is we can do progress in a kind of hybrid mode, I would call it. We can agree, and it's already in place partly. And by the way, BNP Paribas, same for HSBC, we are on Contour, for instance, which is ex-Voltron type of initiative, but there are others, where at the end, if the main stakeholders, which are, let's say, the two corporates, buyer, seller, and the two banks, maybe sometimes one bank, are agreeing around the rule book, if I may say, they can do a number of steps to be digital between themselves. Now, we still have a lot of third parties, customs, ports, and so on and so forth. There are progress there, but we should not wait these being all aligned. It will never happen otherwise. So we can work in a kind of hybrid model where we go digital amongst a number of stakeholders, obviously buyer, seller, banks, primarily, I would say, and then still hybrid model where we continue to send paper. These are things where we need to benefit from the momentum in a way to get to that kind of next stage in a very pragmatical way.
Yeah, I think that's a good point, and also kind of that there are chances in this crisis in a way. Also, there's certain momentum that we should now build on. Bertrand, maybe some additional thoughts. I mean, you're sharing some of those hybrid systems. So over to you.
Well, this was very well put by Jean-François, to be honest. I hope I can add some anything else to the discussion. He mentioned that, of course, we are members of the same blockchain syndicate, and that's fundamental. For us, any of these environments needs to be shared among everybody. We need to share the information, the data, and create a trusted environment. We are the party that belongs to the most of them, because we believe what we need to create is our ecosystems and connect the different ecosystems among themselves to facilitate the flow of data and build the trust. At the end of the day, actually, BNP Paribas and ourselves did one of the very first transactions ever with physical trade out of Australia into China last year. That was highly publicized in the media and other places. But there are other opportunities. What we've seen in the crisis as well, we have made market share thanks to our basically digital solutions. Many clients were struggling to get signatures from other parties, smaller parties, and they were transferring those volumes into us through the use of the usual HSBC net. In our case, BNP has their own tool as well, very successful, and that facilitated the electronic signature and other elements. And that's vital to accommodate and make life simpler. But on the other side, we cannot forget either that especially traditional trade products that are paper-based mostly are used for managing risk, and mostly fraud risks, and fraud happens. And we have seen recently cases in the media that are very significant due to that. So this is why we see this as a joint effort, a common effort. But today, for example, guarantees, 65 to 70% of guarantees issued globally are tailor-made. That is an enormous number of tailor-made paper. So it's not a standard template you can replicate and make it homogeneous and flow easily through the system. No, there are constant changes and modifications. And that pattern, that's where the blockchain technology and others actually will provide a value added. And that's why we are we are investing on those, and we are sponsoring those. Jean-François mentioned as well, of course, then you need all the different players in the ecosystem to be party to those environments, and that will take time. We don't need to wait for all of them. I fully agree with that, with you, Jean-François, but we need to extend this into as many companies as possible. And once that is in place, it's fascinating, because time is saved out of 7 working days in 20 hours, because these systems operate 24/7 and automatically send you an email or a pop-up in your screen. You can automatically react. All the parties share the same information and speed trade in unbelievable ways, but requires an investment as well from the corporate and the different corporates in the party. But that's the future, as well as the use of APIs technology between banks, something we are sponsoring as well, and many other elements.
Thanks. Before we open up for a few questions to the broader audience, Christine, just coming back to the digital side, some corporates tell us, the digital conversation is very much driven by the banks, whereas corporates are more kind of saying, just get the basics right, and that's the main thing. So we saw a little bit sometimes of a disconnect between seeing the pain points but not mentioning digital on the corporate side. Although from our perspective, digital is a means to address those pain points. So, and Bertrand also mentioned that obviously there are some investments also required on the corporate side. What's your take on all this from a corporate perspective?
Well, I would certainly agree that the devil's in the details, and we have been making investments into banking platforms, but as both of the panelists have pointed out, there's no one standardized platform we can plug into to deal with all of the banks that we need to deal with. And so then the question becomes, do I want to make an investment that will help me deal with my house banks, and then I have separate ones for everybody else? And by the way, you still need an API with those guys, so you still need to do some development work on your own side. Or do I just keep doing it the way I'm doing it, because things are going to change again? So that's we always kind of come back to that argument. We'd love to do it, but we have to weigh the investment against the complexity, against the fact that this stuff, it has to get done properly. And the more complex you make a system, the more chances you have of things going seriously wrong.
Yeah, that reminds me when I was many years ago when I was working for a corporate. A rule of thumb of my CFO was very simple: no new systems, no new usernames, no new passwords. If we cannot do it with what we have,
no new passwords. Oh, geez. Okay.
Yeah. So that's the I fully agree. At the end of the day, you need to have a return for the investment, isn't it?
Yeah.
Yeah, I think it's up to the banks to, I think, also explain, what is in it for both parties. Because again, nothing against the banks, but sometimes corporates do say, it's an agenda very much driven by the banks. We see that the efficiencies are very much, increased for the banks, but what is in it for us? And I think that dialogue needs to be kind of addressed and from both sides, as otherwise you obviously need both parties. So that's paramount. Well, thank you very much, Christine and gentlemen, for the discussion. I think we have a very few minutes left just for maybe one or two questions. So we'll open up the questions now for anyone here listening. I think it's a great opportunity to ask either the representatives from the corporate side, but also obviously the representatives from the banks. If you have any questions, this would be your chance. So let's just wait for people to okay. So the first question we have is in regards to kind of best practices, what you've seen actually, Christine. So dealing with obviously many banks, you mentioned you have house banks obviously, but you also have many other banks, being a global company. Have you seen kind of best practices to support you, especially in the first couple of months during the crisis, that you would like to see more broadly shared, so to speak?
Yeah, I think because the workload is high anyway in a time like this, it would be great if we could somehow agree on sort of a standard information package that people need to provide, or the company should provide at least a basic one, to start discussions on whatever terms that would need to be changed, instead of, okay, this bank wants this supplier wants that. We have a relatively small treasury team. We can't do bespoke packages for everybody, and that would help to sort of kick off the discussion, much more efficiently.
Great. Yeah. So I think that comes back again to what we've been hearing again and again, that it's really about the operational efficiencies that really count. And again, I mean, if digital capabilities facilitate improving the operational capabilities, including also fraud, I think Bertrand, I think was good to highlight that that's a big part of the also of and the reality of trade finance, that this is an important one to keep in mind. So we have time for one more question, so let's you just use that time, and we have a few more, but I have to pick. So maybe for the bankers, so looking into the crystal ball, and I know we don't have it, but just taking a guess on how long do you anticipate the COVID will have a severe effect on trade finance in your key markets, and assuming it will last longer than initially anticipated, are there any changes in recommendations you gave back in March or April compared to what recommendations you would give now? Maybe if you want to start.
Yeah. Maybe a very short one, I would say. As I mentioned just earlier on, in terms of timing, no crystal ball, but because of all this interdependency and so on, it's gonna be for quite some time, right? Whether it's 2022, 2020, mid 2021, or whatever, I don't know, but it's for a long period. And the only not a recommendation to change anything, in fact, but in fact to continue, if I may say, is to share as much as possible the personal situation, if I may say, or the specific situation of you as a corporate with your ecosystem, so that we can co-design the best solution there and the best forecasts, because it will be a case by case. It's sectorial, very different. Depending on where you operate, it's very different, whether we are strong yet or not in e-commerce, and so on and so forth. So a lot of interaction on the long run, I think.
Yeah, go ahead, Bertrand.
No major changes. Actually, Christine said it very well. Well, we need to keep the plane flying. That's the first point, after all. But then I will look into this differently. Start thinking strategically about how to reopen quickly, fastly, and with balance sheet efficiency solutions. Leverage is good, actually demonstrates the company has a solidity, the banks are behind that company, but once the market reopens, how do we get back quickly and fast enough into BAU as before, in order to get market share or keep growing and manage risk? So we see companies already planning in that environment. I think it is critical, but first of all, keep the plane flying. Absolutely.
Well, thank you very much. We are, I think, 3 or 4 minutes over the allocated time. So thank you very much again for joining, those on the panel, but obviously also those who have been listening and who've been providing questions. We have recorded this, so you will be able to share with your colleagues. We'll send you a link for the website. So looking forward to that, and also the material you've seen on the screen will be shared. And yeah, so let's keep it's a really good phrase I will keep in mind. Let's keep the plane flying first, because, and I think that's also even in private life, you can get distracted with all the bad news, but first you have to keep the ship rolling and the plane flying. So with these words, thank you very much, and have a great rest of the day, and keep on working from home, and stay safe.
Thanks a lot.
Thank
You too.
Good.
Thanks.
Thank you very much.
Bye-bye.
Thanks.